Hey guys, welcome to this video. In this one, I'm going to cover the dollar CAD. I'm just loading up some other screens around me, but we're going to go over it just because we've got some key US news coming at 3 for the dollar side, and you've also had Canada net change in employment. That just came out at 24.9k with a consensus of 15. So quite a big beat, okay, and that's green, okay, so it's obviously positive for the Canadian dollar. There's more people in work essentially. So what have we got at the moment? Well, we're at a really key tech zone, which is why I've really picked this. It has come down for a number of days now. If we look at our weekly, you can see had big red candle off from the top here. We looked short here. Many of you will remember that because I spoke all about it. You saw it once, okay, and lots of you know I'm a price action trader with risk management rules for a reason. Okay, it's because every time you push up to these levels, it becomes no coincidence at all that you come away. And there would have been many who believed so strongly in this downtrend and that it couldn't possibly do anything else. And of course, it did. So just be aware that you can break out these downtrends and then come down again. We're not looking to buy breakouts. We're just aware that it could have been a retracement up to that previous high. But nonetheless, we look short in both areas. You should be out for DCA gains anyway. Okay, so instead of buying breakouts, we essentially short here. We trade very, very small and diversify, so we can re-enter there, and you can see both of them are now dead. So what's really good about this at the moment is a few things which I'm going to run over now. I am long biased on the dollar CAD. I'm long on it myself. You can see we've come back to very key early moving averages, your 20 and your 40. And you're also on your ending your third week, going on to your fourth week of straight down movement. So clearly, lots of selling power within the dollar. As we know, that's why you've had those increases in price in the euro dollar, the AUD dollar, pound dollar, etc. That has all brought up to key weekly resistance. If you check your Dixie, you'll be able to get a summed up sort of overall bias, if you like. But you can also see it on the dollar CAD, because if I flip to the monthly now, what you can see with this month, obviously it started today, which is why that's such a thin movement, hasn't really had a chance. You can see you're coming on to some historic levels, a bit like you were previously with gold. But more importantly, I would say is your weekly at this point. And it's because you're coming to those key moving averages. And like I said, just take a look back, and there's various areas of contention. That's why I use price action, because it's the only way to get a consistent gauge based on reality, or in other words, based on what you could physically see at the time. And you'll see there's many parallels between price points throughout time, and picking them successfully is basically how I teach people to trade, because it's very reliable. So on your daily, you can see you've slammed back down to key 200 MA at this point. Okay, that's really significant for us because it tells us, okay, well, we've come to a low price on our daily. We've come down for weeks. And it's no surprise we're now touching a key 200 MA. So these are the kind of technical zones that I enjoy a lot, because they just come to areas of rejection again. They're in line with your larger moving averages, which clearly are taking a longer period of data and telling you, okay, well, quite significantly, the price hasn't been at this sort of gauge for 200 periods. That's a very long time. So it's not the time to short. Okay, you shouldn't be shorting your US dollar in general. Because you've already come so far. If you wanted to short it, you should have done it up there. If you wanted to short it, you should have done it up here. And we were short, my Academy members and I were short all the way down on every push. And now we're finished selling because we want to be long. We want to change that bias from short to long, because we know there isn't really availability for continued short entries. That's what high prices are for. And like I said, because you know you're at 200 MA, I guess the point really is that you've got to have had a low price. That's why your stock oscillator is down, or your RSI, or whatever you're using. Whenever they're oversold, you shouldn't be selling. And when they're overbought, you shouldn't really be buying, because you're just simply buying and selling at high prices or low prices, vice versa, okay, respectively. So if you go on something like your 4 hour, you can see very early rejection. You're coming straight away. On your 1 hour, you can see more of it. So if you do trickle and trickle maybe slightly under this previous low, it wouldn't really shock me. But nonetheless, you know, these are value areas for longs because you've had that significant down move. If it does become the case that you do get further, I wouldn't be surprised if you get in line with something like this. Again, in accordance with price action rules, really, is what I'm referring to. If you get to this point, 134, you know, it wouldn't be a shocker at all. But on those longs, if you do take it long, you could perhaps consider early liquidation or early exits along where I've drawn this line, because you've got significant contention in that area. 136.34 probably is where I would look for that. Anything higher, really, generally after that. And again, we're going in line with this long-term bias that this is a liquidation area for long holders and people who want to get short, investors alike. And, you know, like I always say, if you don't believe me, that's what's happened previously. And I would probably say if you do come above that, you're going to be referring to this later on for new short entries. So you've got room, really. You would just need to see a larger change in bias. We've got Fed Chair Powell speaking at 4 o'clock. GMT time. That's in 2 hours and 10 minutes, so not too long. You've also got some ISM manufacturing preliminary results for November, I believe, from the US. So a bit of US data there, which could move things around. You'll just really have to wait and see how that unfolds. But the positive news in Canada hasn't really done much, because if you look on your lower time frames, you just get this flash up, flash down. It's nothing really, really significant. Okay. And I wouldn't be surprised, because it's not really going to affect things. You know, 24,000, 25,000, not a massive, massive blowout number. So to sum up, I guess we're looking long on these falls. We're doing it at technical areas because we need those ideal price points. Your stock oscillator or RSI, obviously, whatever you're using, may dwindle slightly. You might find that. And if you do get lower, I should think you'll probably trickle down there, because you've got a few areas of price action in the way, probably going to act as a barrier. So thanks so much for watching. As always, don't forget to like, comment, share, subscribe, and I'll see you in the next one. Thanks for watching. My free training, by the way, is underneath.